Hi, folks. Adam Taggart, co-founder of peakprosperity.com here. On a weekly basis, we bring in a portfolio of experts that we're fortunate enough to have access to get their opinions on what's happening in real time in the world. This week, I've got two of them joining me. We've got John Rubino, who is the founder of dollarcollapse.com and author of The Money Bubble. John, thanks for joining us.
Hey, Adam. Great to talk to you.
Great to have you here. We also have Charles Hughes Smith, proprietor of TwoMinds.com and author of really too many books to list here, but one that's particularly relevant to today's discussion is called Money and Work Unchained, which basically predicted a lot of what we're actually going through in this current economic market / monetary crisis that we're heading into. Charles, thanks so much for joining us, especially since you're connecting in here from Hawaii, correct?
Right. Yeah, it's always a pleasure.
All right. Well, it's funny that, I've been reading both of your work for, 12 or more years now and been in good contact with both of you guys for that period of time. And I just learned when you both hopped on this call that this is the first time you've actually had a chance to meet each other face to face, at least virtually. So it's kind of fun to, I'm going to have a lot of fun watching you guys kind of bounce ideas off of each other during this conversation here. So we call these unscripted discussions with guest experts like John and Charles here, we call them off the cuff here at Peak Prosperity. It's usually a premium offering that we offer to our paying subscribers. This one's going to be free to everybody. Chris is concurrently recording another off the cuff this week himself. That will be for the premium subscribers. But given the number of questions that we've had over the past couple weeks from a lot of our readers, particularly a lot of the new readers to Peak Prosperity, we've had a bunch over the past 2 months with all our coronavirus coverage. They have said, hey, anything that you can tell us about what's going on with the markets, with the initial meltdown, now the volatility that we're seeing as we're sort of bouncing around here. Any guidance we can give them or insight we can give them would be greatly appreciated, but particularly more than the market insights, they really want to know what's going to happen for the greater economy. In other words, if we pull back and we look forward 3 months, 6 months, 12 months, what is the world going to look like really for kind of the average person here? So gents, I'm going to ask you some questions about those topics, and I'm sure there are going to be times where we kind of go into our wonky, market or Fed speak, but I'm also going to try to pull out my decoder ring and help us sort of simplify a lot of this stuff for some of the people who are sort of average investors who might not be as steeped in that information as us, just to make it as relevant as possible for them in terms of, okay, how is all this chaos that's going on right now going to really impact my life going forward? So with that, guys, let's dive in here. As we've been tracking the coronavirus and the impact that it's had on the global economy, what we first saw was China basically shutting down, right? The world's second largest economy, basically hanging a close sign on itself for the better part of a month. China is now beginning to go back to work. We certainly have a lot of anecdotal reports from folks that who do business there that factories are beginning to spin up and whatnot. I don't know if we have great clarity in terms of what % capacity they're running on yet. But certainly their closure created a huge ripple effect across global supply chains that are still kind of propagating through the world. And now that the virus is spreading predominantly outside of China into the rest of the world, we're seeing other economies having to shut down and send their workers home in order to try to flatten the curve and keep people from getting infected too fast in their countries. So we're kind of seeing a replay of what we just saw going on in China. So of course that's having huge economic implications. And in the US, just last week, it was a little bit over 3 million people filed for unemployment. And just for a little bit of comparison, back during the 2008 great financial crisis, we were seeing large job losses as we were going into that recession, but they were on the order of magnitude of about 500,000 a month. I think the highest month may have been somewhere around 800,000 people. And so to see over 3 million people in just 1 week, and we're just at the beginning of the outbreak here in the US, meaning the numbers that we're projecting over the next month and a half are going to make the ones that we're still seeing today very tiny. We've still got a lot of pain ahead of us. So that's all context to ask the larger question of, it looks like the debate that folks were having for the past couple of years of, hey, when is the next recession going to arrive? Because we've been in sort of this longest bull market run in history. I think that debate's over. I think we know we are now in that recession, and it's now just going to be a question of how deep a recession and how long a recession. So I'd like to just start with that question for you guys. John, I'm going to hand the football to you first, but how serious do you think the economic damage that is being done right now is? And do you see us hunkering down here for a long, protracted 2008 style or worse recession, or do you think this is something that could be over more quickly than folks expect?
Oh, well, this is definitely going to be worse than the 2008 Great Depression. Just this coming quarter is going to be outrageous. The number of people that are being laid off already, and the number of small businesses that are closing down, the number of big corporations that have pulled back on pretty much everything, pretty much guarantee that the numbers are going to be just horrendous. A big drop in GDP, a huge jump in unemployment, and everything that flows from those two things. Longer term, it's harder to say because on the one hand, what's happening is hugely deflationary. In other words, the economy wants to go into a Great Depression right now. But unlike the days of the Great Depression, every global central bank has an unlimited printing press. They can create as much new currency as they want to and just shovel it out into the system however they want to do it. They can bail out everybody in sight, or they can just send us checks, which they're doing right now. And so you got this hugely deflationary force on one hand, going up against an extremely inflationary force on the other hand in central bank money creation. And it's hard to say what those two things do when they interact out there, because we've never done this before. This is completely uncharted territory. And either one of those things could have life-changing impact on the global economy. And it's not clear which one wins or if it's a draw or whatever. So, beyond one quarter, it's really hard to predict anything. But I think the only thing you can predict with certainty is volatility. What we've seen in the stock market and the bond markets lately will continue, because nobody knows what's going to happen when the government creates $10 trillion and gives it to us, or when the airlines and the cruise industry and the real estate industry all shut down in the space of a few weeks. Nobody knows what that means either. So this is one of those unique times that on the one hand, it's fascinating to live through, and on the other hand, it's terrifying to live through. And, as a finance geek, I think this is really interesting, but I think the only way to actually not consider it to be terrifying is if you're at a safe distance while it's happening. And that's not true for most people. Most people are going to suffer directly from this. And their lives and attitudes going forward will be changed forever.
All right, I want to dig into that with you in just a minute here, but I want to punt to Charles now. So Charles, John just basically said, this is sort of one of those unstoppable force meets immovable object moments, right? Where you've got the forces of deflation, which the markets desperately want to do, from natural market forces, squaring off against the infinite printing presses of the world central banks. So with that context, what would you add to what John said here? I'm guessing you'd probably say, yes, volatility is going to be the order of the day. Do you see one of those two forces as being more likely to win out than the others? Or is this a moment in history where we just have to sort of watch Godzilla and Mothra battle it out and figure out who's left standing?
I think my context is focused on the dynamics of the last 20 years, and which I would list three: globalization, financialization, and rising cost structure. And I'm going to just touch on those. We all kind of know what each of these means, but I'm just going to touch on it, as you say, to kind of make sure we all are on the same idea. Is globalization, of course, we all know, is offshoring of jobs and factories. That's the sort of real world globalization. But in our little niche, it's also globalization of finance. So in the 2008 lead up to the meltdown, then, Wall Street was packaging subprime mortgages and selling them to, pension funds in Norway. So if you want to look at where the money is really being made in globalization, yes, it's being made by shifting production to lower cost nations with poor environmental standards and corruption, so you can buy your way to whatever you need to get done to maximize your own profits. There's that element, but there's also this financialization. And so in terms of financialization, that just means turning everything into a commodity that can be traded globally. And so mortgages, hey, that's globalized. Student loans, that's packaged and globalized. Auto loans, packaged and globalized. And on all the assets around the world are now available to be leveraged up, right? And so we've seen a massive increase in global debt, right? I think it's on the order of I'm just kind of guessing, you guys probably have a better handle, but I think it's from 100 trillion to 200 trillion now or something like that. And then global assets went from like 250 to 350 trillion in total assets, including real estate and so on. So we've had this enormous expansion of what many of us look at as fictional wealth, right? But it's real if you sell it at the top. So and then the third point is the cost structure. And I want to mention that because within inflation and deflation, we've all experienced real world inflation in the US and the developed world. And in the US, it's been healthcare, right? Where those of us who are self-employed and pay our own healthcare insurance have seen increases of 5, 10, 15% a year, right? And so that's like an insane amount of inflation that we're paying directly. And then there's also childcare, rents have skyrocketed, taxes, fees have gone up tremendously. So we've experienced a huge loss of purchasing power, if you will, already. And what the impact that I see in terms of the next year is small businesses cannot afford to pay these high costs. They've been hanging on by a thread for the last X number of years. And now with this reduction in their revenues, the revenues are on a greased slide. It's really easy to see your revenues go down, your income go down, your profits go down, but your costs are staying sticky. They don't move down. Your taxes are still going to be high. Your fees are still going to be high. Your compliance costs are going to be high. Your healthcare is going to be, sky high. Your rent's going to be sky high. So I see like a mass extinction of all the small businesses in the U.S. that were clinging on mostly by the desire of the owner or the entrepreneur to make it work. And often that required them working extra hours and earning less, as their costs went up. So that mass extinction of small business is already baked in, but it's not caused by the virus. It was caused by costs going up to the point where small business was struggling to survive even before this. So all these things are reversing, and they actually have been reversing for years. And that's my last point, is globalization has stalled out years ago, right? If you look at global trade as a percentage of growth, you look at operating earnings of Apple, they've been flat for 4 years. So globalization's been ebbing and financialization has run into diminishing returns. There's just no way to push that kind of skim and scam forward anymore. So as those erode and reverse, then there's going to be massive changes in the global economy.
Well, one of the things that we didn't realize, or most people didn't realize, was that we had created a world that was basically priced for perfection. In other words, everything had to go right for the globalized, just-in-time inventory world to function. And it did for a really long time. So that led a lot of people to believe that that was the new normal. In other words, there would be no big wars anywhere along the supply chain. There would be no mass civil unrest. There would be no big natural disaster. Because if you break one link in a 8-country supply chain, the whole thing shuts down. And your just-in-time inventory stops, and you don't have anything to do if you're the final stop in that, production chain. So we found out that that system was extremely fragile. And I think that's a big lesson that, even if we fix the coronavirus thing this month, that we will carry that lesson forward, that the next thing that comes along could break the supply chain in the same way that this did. And I think that's going to lead countries to begin to reverse globalization, as Charles said. It's now in our interest to bring the production home and shorten our supply chains and to keep inventory, amazingly, physical inventory on hand now. So that's going to be a very big change, and it's going to be really disruptive because we don't have the factories in the US to do that. China has the factories, but a lot of them are going to shut down. So there are financial crises that flow from the process of rolling back globalization that are still to come. Even if this thing that's going on now completely goes away and we're back to quote unquote growth, and there's no pandemic anymore 6 months from now, we still have that process to go through, along with all the other processes that have to go through to reverse out the the fractional reserve banking fiat currency regime that went along with globalization. So there's a world of turmoil coming, regardless of whether we fix our current problems or not. The big crisis is still to come, and this just gave us a little glimpse of what it is that is already baked into the cake financially.
Well, I think, we could have, both of what you two just said, we could have had that conversation 2.5 months ago before anyone had heard of the coronavirus, right? I mean, there were lots of reasons to point fingers at the current economy and say it's not sustainable for a whole variety of reasons. And, John, you mentioned that we prioritized on efficiency for the trade-off of resiliency, right? And that's one of the things we're seeing here with the breakdown in supply chains about how vulnerable we were to it working perfectly. But I think above and beyond that, there's much that you guys have said today and have said in the past that say, hey, look, there's a lot of parts of this machine that just aren't working well anymore and are setting itself up for a big corrective event at some point in time. And John, you've talked about the money bubble. I think a lot of other commentators have talked about the everything bubble, and a lot of speculation over the past number of years is, all right, what's going to be the trigger that causes that bubble to burst? Looks like coronavirus may be serving as that trigger, TBD, but it's certainly taken a really good shot at it right now, right? So I think for both the systemically unsustainable reasons that you guys talked about, as well as the desire not to be as vulnerable and unresilient going forward, globalization really is going to be walked back to a certain degree as the dust settles from this, which is going to be really interesting, right? That's going to shape, geopolitical relationships. It will have, kind of pros and cons, for folks, let's say, living in America, right? There should be some more domestic manufacturing jobs coming back in. That said, the cost of products will probably go up, right? So some of the squeeze that Charles was talking about earlier will probably intensify for the average U.S. consumer. So, we can do a lot of speculation as to whether it's going to be net good or net bad or whatnot, but basically just a lot of the cards on the table are going to be getting shuffled here in ways that, we probably aren't going to be able to fully predict. But that said, lots and lots of fragility in the system that's being exposed and being exposed in a very quick period of time, right? So I just mentioned at the beginning of this video, 3+ million jobs, lost like that in the first couple of weeks of this. And we still have the really big numbers ahead of us in terms of people infected and deaths, at least in countries like the US and in Europe and whatnot. So when we talk about how people's lives are going to change, let's look at sort of for the rest of this year. You're going to have massive bankruptcies, right? Charles sort of talked about this as an extinction level event for many small to medium-sized businesses, and we'll see if the the grants, the loans/grants that are part of the latest stimulus package that Congress is approving, will make any real difference in that space. But Charles, you and I have spent a lot of time over the past couple of years, worrying about the small to medium-sized business before the coronavirus came along, and many of those businesses, if you're in an area that's under lockdown for a month or 2 months, and you have zero sales for that period of time, there's probably the vast majority of those businesses can't recover from that, right? They're just dead. They're not coming back. So you add to that, all the job losses that are part of that. Even on the corporate side, there's going to be a ton of layoffs. No matter how you slice this, there's going to be a ton of layoffs coming out from large companies over the next quarter or two as they go into what we would normally call earnings seasons, but I think we're going to call horrific losses seasons for at least the next 2 quarters. So as we look at that sort of tremendous damage being done in terms of businesses shuttering, people being out of work, unless we somehow magically return to just ferocious, real growth, what does that future look like for people? I'm sure it doesn't look too great, but I mean, just to kind of make it, realistic for folks, what are you expecting? Are you expecting a long L-shaped recovery? Are you expecting people who get laid off to maybe expect to have to be out of work for, be prepared to be out of work for over a year? What does that world look like that we're entering into?
Can I talk to that?
Yep.
Oh, okay. I think being an old person, I remember recessions going back when I was actually still an adult. So this is 1973, 74, which was a severe recession caused by an oil shock. And that recession never really ended. It kind of noodled up and down, stagflation, and then there was a sharp recession again in 80, 81, 82. So it's been 40 years, in my view, since we've had a real recession. Since the early 1980s, the Federal Reserve has quickly jumped in and sort of pumped everything up. And so the recessions since then were extremely short and mild. The 1991 recession was, again, an oil shock caused by the invasion of Kuwait and Desert Storm. That was over in a few months. And then 2000 was actually limited to the tech industry. In other words, if you didn't work in the tech industry or you hadn't speculated in tech stocks, it had very little impact on the rest of the economy. And even 2008, the impact was large only because it affected housing, which was, of course, is the foundation of most household wealth. So I'm kind of thinking that we're going to finally have a real recession, more like 1981, 82 than 1991 or 2001. It's going to affect the entire economy. And it's because the excesses and the fragilities that you and John have described are so vast that and financialization and globalization have infected the entire economy. It's going to take out huge chunks of every sector. It's not going to be limited to one industry. And so in that sense, I think people should expect to be on unemployment for a long time, and you can expect the government to extend unemployment benefits. And as a kind of an aside, having been self-employed most of my life, the psychological damage done to losing your business or your livelihood is just really severe, right? It's up there with death and divorce. And that's going to be tragic, but it's going to be part of the reset where the cost structure has to come down to the point where people can start small businesses again and hire people without taking gigantic risks. And the other thing that I'm real curious about what both of you think about is the debt, because that's what's really crushing and so different from 74, 82, 2002, and even 2008 is the level of debt people are being crushed by is so much larger. You know, people have mortgages, they've got student loans, they've got auto loans, they've got credit card debt, and businesses are under huge debt loads as well. And so I'm real curious what each of you feel about how that's going to work through, because to me, That's the crushing pressure that's going to have to be blown off one way or the other, either defaults and written down or paid down. And if you're paying down debt, you've got less money to spend. And that's why it's going to be, there is no V-shaped recovery. There's going to be stagnation because we've got to get rid of that gigantic debt load, which I would say globally, 100 trillion has to vanish, minimum, maybe 150 trillion. And then in the US, 30 or 40 trillion has to go away, one way or the other, either defaulted and absorbed as losses or paid down.
Okay. Well, John, so you've thought a lot about this. What do you think is the answer there?
Well, see, that's the crossroad that we're at right now. If we get rid of all this debt, and we do have to get rid of it, Charles is absolutely right. We can get rid of it by default, where everybody goes bankrupt, they don't pay their debt, and we have a 1930s style depression. Or we inflate that debt away by lowering the value of the currency to make paying off these debts a lot easier, because you're paying it back in depreciated dollars or euros or yen, because it's a global thing now. And governments get this, and their policy is to go for the inflationary solution. They basically have to, going forward, bail everybody out. If you look at the pockets of the worst quality debt right now, it's all stuff that we've mostly created in the last decade. Subprime auto loans, low quality corporate debt, and student loans, right? Along with, emerging market dollar denominated debt and lots of other things. But those things, all of them will default going forward, just about, especially in this world. If you've got student loans and you don't have a job, obviously you can't pay your student loans off if you want to eat and have a roof over your head. So that's what goes first. And governments get that, and they know they have to bail all these guys out. But the process of doing that, in other words, of trying to keep huge segments of society from going bankrupt, involves creating so much new currency that shifts the pressure over to the currency. In other words, you keep things from exploding on the bad debt side, but at the cost of creating so much new currency that the value of the euro and the yen and the dollar start to fall against real things, not against each other, because they'll all be declining more or less in tandem. But the price of real things like gold and silver, high quality real estate, energy assets, farmland, they will go up in local currency terms at an accelerating rate until people figure out that it's the policy of the government to make this happen basically forever, and they start dumping those currencies. And see, that's the big risk out there to the global economy. If you've got an unlimited printing press, you can bail anybody out that you want to. You can keep the entire retail sector from going bankrupt if you just give them all a bunch of money, right? And but what you can't control is the value of your currency in international markets. And that's the world that we're creating by trying to fix the excessively leveraged world that we've created in the past 30 or 40 years. So the currency crisis phase of this process is what comes next, if governments really go for it. If they absolutely do whatever it takes to bail out the over-indebted sectors of the economy to avoid a depression, they then create some kind of hyperinflation. And so that's the dynamic that we need to be watching out for, because yeah, sure, we can keep Airbnb and Carnival Cruise Lines from going bankrupt by just giving them $500 million each, or $500 billion each, whatever it takes. But we can't control the value of the dollar while we're doing that. And so to me, that's the really interesting and scary next stage in this process, when nobody trusts our currencies anymore. Right. And it's hard to say what happens after that.
Well, okay, because that's actually the question I want to try to dig into, if we can, even if it's just to speculate. So, what you've outlined really well, John, is the classic, does this end in, deflation or hyperinflation debate that's been raging in our industry for, well over a decade, right? For those of us that have been seeing these large systemic issues and trying to, look into our crystal balls to figure out how it all ends. Too much debt has really, on the economic side, that's sort of been at the root of the issue, right? We've been spending for I don't know, 40, 50 years now, we've been borrowing as a country at about twice the rate as our GDP, right? And you just can't do that forever, right? At some point, your debt load limits, anything that the underlying economy can do, and you eventually collapse under the debts, unless you do what you're talking about, right? So it really is a choice between a 1930s style depression or kind of a Weimar Republic or Zimbabwe style hyperinflation, right? And we look at all the debt that the system has taken on, even in just the past 10 years, right, since coming out of the 2008 crisis. And it's dwarfed anything that we had done leading up to that, right? So we certainly hadn't learned our lessons. No politician, as we know, is ever going to get elected on an austerity platform. Just doesn't work that way politically, right? They certainly don't want to do it. They want to be able to, show that they're doing something and give people what they want in the immediate term, which is, free money is always a great way to get reelected. Telling people that it's time to tighten our belts and go through, years and years of hardship. Politicians don't want to make those promises, and nor do their constituencies, don't want to hear it, right? So we now find ourselves in this situation where the sort of house of cards economy that we've had is looking like it's, really going to teeter over. And so huge stimulus measures are needed to keep it from completely collapsing. And the Fed has said exactly what you just said. They have said, look, we have an infinite printing press, right? Like if need be, we can print whatever it takes to save the economy. And they're saying that to project confidence that they can actually kind of ride to the rescue here, but it should freak everybody out because it basically just says we can hyperinflate the currency if that's what the situation calls for, right? So I think people understand if we were to go through the debt default rate, right? And Charles was kind enough to sort of size the amount of debt out there that would need to vaporize. It's a massive amount of debt, and it would be Great Depression times for folks, right? I mean, there would just be lots of companies that would just go away, right? There's just a lot less that we'd be able to do as a country, and certainly growth would be hit for a long, long time. Let's talk a little bit about what would happen if, as it looks like, they do crank those printing presses, up to 11 or infinity or whatever metric we want to talk about. Is there any potential way in which that could work, where they get us out of this, immediate crisis we're in and get us back to some place where growth could kick in at a rate where it starts, bringing the need for that debt load down lower, which is what the politicians always say is going to happen, but never happens. And if not, it's a crisis of a different stripe. What does that look like for people? If the Fed really does and the other central banks really do ride to the rescue here. I mean, John, you mentioned, yes, the prices of other tangible real assets begin to appreciate on a relative basis, which is one reason why at peak prosperity, and I know at your sites too, you guys have, encouraged folks to get into precious metals and other high quality fixed assets. But for the average person, what does that look like? I mean, I'm assuming it looks like, yes, you keep your job, but all of a sudden your rent goes from $2,000 a month to $6,000 a month, and groceries for your family of four go from $80 a week to $400 a week, because the purchasing power of the dollars you have are just getting diminished by all the dollars that are being printed. John, let you give just a quick answer to that, and then we'll punt over to Charles.
Yeah, well, you're describing inflation as we knew it back in the 1970s, for instance, when your cost of living goes up faster than your paycheck, and you get squeezed by that, so that your quality of your life goes down at an accelerating rate. And yeah, that's one way this could play out. That is fairly likely. It's highly unlikely that we're able to inflate our way out of this debt and go back to normal. But of course, I thought we couldn't do that in 2008. Right. I thought that was the end of the road, and we managed to double our debt, and by so doing, grow, quote unquote, the economy again for another 8 years or 9 years. And if we did that again, it would be at the cost of an insane amount of debt. We would be guaranteeing some kind of just epic financial crisis out there in the future. But, it feels like this has to be the end of the process, which means, or the end of the debt accumulation process, which means we have to start trying to inflate our debt away in an aggressive way. And yeah, that hits regular people very hard. It hits retirees because Social Security payments will not go up as quickly as the cost of living for them either, and so the people who don't deserve to be hurt by this are the ones who are hurt by it. And the super rich will be okay because they've got advisors who can tell them how to navigate this process, buy inflation hedges in that kind of a situation, buy gold and silver and other things that go up when the currency is going down. So they'll mostly by and large be okay. Regular people will not.
All right, so Charles, to answer your question, so the debts are being addressed basically by the printing press, right? So in this scenario, on top of what John just mentioned, what do you see as sort of what the average person needs to be looking out for in that type of scenario?
Right. Well, I totally agree with John that this is the end of the road. This is the debt super cycle. That's a term that everyone can look up online and read about. And the two dynamics to me that mean this is not going to be recoverable. We're not going to be able to go back to quote growth unquote. Is printing currency, as we all know, does not create actual goods and services. It doesn't create collateral. All right, and it also doesn't create credit-worthy borrowers, because the whole expansion of our economy for the last 40 years has been based on borrowing money into existence, right? And having some borrower have the income to service that debt, right? That's the whole US and global economy in a nutshell. And so if there's no creditworthy borrowers left, if everybody's hanging on by a thread or seeing their income, as John said, eroded faster than they can earn more money, then there's the lending bubble blows up. And so then your banking sector blows up because there's no qualified or creditworthy borrowers left, and so that's those are the fatal toxins that are now embedded in the global economy. There's no way to overcome those. You cannot create creditworthy borrowers by printing money, and you can't create collateral. So that leaves us with, well, you've got to manage your own capital. As my number one response for ordinary people. Do not think that handing your money to a 25-year-old gambler running a mutual fund is going to save you. No. You got to manage your own capital, which includes your labor, your skill sets, your social capital networks, and whatever financial assets you have, which you need to get into something which is basically out of the fiat currencies that, as John said, are going to be hyperinflated away. And what's funny about money supply is history shows that this is what happens. And I've just been reading about when Spain, and I'll just make this very quick, is when Spain discovered all that silver in South America and it flooded into the world, the value of silver, which was money at the time, fell by 2/3 as the money, this new gush of money flooded into the global economy. So it's one of the true things we can look at history and say, yes, when you create money out of thin air, you're going to get a massive reduction in the purchasing power of your labor, So you got to get into something outside of fiat currencies. And what that is, well, that depends on who you are, where you live, what your skill set is, how much capital you have, and so on. But obviously you want something that's real collateral.
Okay. That's great advice for the individual person. And I think something that we have echoed together on many, discussions we've had on peak prosperity, and that you've had on your own sites and other people's sites. And it completely want to underscore that. It's why we're big fans of precious metals, like I mentioned earlier, but really any kind of sort of inflation adjusting or inflation immune type of assets. And those tend to be hard assets or fixed assets or things that just can't be, quickly manufactured overnight the way that dollars can be. So that's at an individual level. At a societal level, I want to just grab my pitchfork for a second and ask you guys to join me. because I think with both of you, I've often asked the question, man, what is it going to take for the pitchforks to come out here? I've really been pretty amazed with the American populace, at least, as well as with certain other countries, but that with our ability to withstand the abuse that has been heaped upon us by those who have been running our system and benefiting from it. And it seems like this time around, as happened with 2008 and prior crises that came along, is that the people who were largely responsible for creating the conditions that led to the crisis are the ones who were the first to get bailed out and made whole. And in the type of future that you're talking about, and again, we're projecting here, but if we really don't think that we're going to go we're going to let the debts default on their own, and instead we're going to print to backstop them. Basically what you're saying is anybody who holds their wealth in dollars is going to be impoverished by it, or at least have the value of their wealth greatly diminished. And I would say the vast majority of Americans hold all their wealth in dollars, right? It's both their income and their savings, if they have any. And of course, we've railed about the low saving rates in America for a long, long time. So those people are going to get hit very hard. And again, before the coronavirus, we've spent a lot of time talking about how those people have been getting hit hard for a long time, right? I think you can talk about the 2016 presidential election as largely a vote for anybody but the establishment, whether it was the popularity of Trump on the right or the popularity of Bernie on the left. There's a lot of people in the middle class and below who are just hanging on by their fingernails. John, you mentioned healthcare is a great example of just one of the many essential costs for most people that's been going up at a double-digit rate for years and years now, right? So those people don't have much between them and in pure poverty. If we end up going into this future that you're projecting may actually occur, when do the pitchforks come out, and what type of social implications do you see from this? Do you see actual massive unrest? Do you see growing demands for democratic socialism, where the people are being promised a lot of things that they're currently not getting for free, free healthcare, free college, et cetera, or maybe even really punitive and redistributive wealth taxes on the wealthy? Or is this just turns into sort of a banana republic where you've got a small oligarchy that's kind of just ruling everything? John, let's start with you.
Okay, you can make the case that we're already at the banana republic stage now.
Yeah.
We have been, as inequality has increased, we've been going through our version in the US of civil unrest. First, we had the Tea Party, which was a right-wing protest movement against government expanding ad infinitum. And then we had Occupy Wall Street, which is the left-wing version of the Tea Party. Then we had Donald Trump, who was a politician who ran on a populist platform that said, yeah, there's a small group of elites who are screwing the rest of us over. I will fix that. And I'll stop the whole free trade thing that is shipping your job to China, and I'll close the borders to keep all the cheap immigrant labor from coming in and lowering the wages of your job. I'll do all that. And he got elected against all the odds, against every expectation of the establishment. And this time around, Bernie Sanders came fairly close to winning the Democrat nomination with the left-wing version of that, which is, hey, you're being screwed over by a handful of rich people. We'll give you free everything, and a lot of people bought into that. So it's a general truth that when you screw up your financial system, you screw up your political system. And that's what's happening in the US. We're trying to work within the system, and it isn't working. So the next stage of this process could very easily be people taking to the streets, because clearly the Occupy Wall Street and the Tea Party didn't succeed at anything, and Trump is only doing some of what he promised. And now we've got this horrendous economy where the rich are still rich, and we're losing our jobs, et cetera, et cetera. So it's going to be very easy for people to become frustrated enough to demand immediate change, and to do that, in the manner of peasants with pitchforks throughout history. So yeah, we could see something that's French Revolution-esque. next time around. Hopefully just in a political and financial sense, not an actual physical sense where they chop people's heads off. But it could be something like that, where there's a borderline revolution that changes the political system. And that's not that big of a surprise when you look at how the financial system is spinning out of control. It's not a surprise that the political system would spin out of control right along with it. So, it's yet another scary aspect of the coming decade.
Yeah, I'm going to push a little bit on this. Do you feel that they'll be able to avoid such a social uprising this time around?
I think it's a real possibility, but nothing is baked into the cake other than extreme volatility going forward. And then because this is uncharted territory, we've never been in a situation where everybody has an unlimited printing press and the world is this deeply in debt and governments are completely clueless about how to fix anything. We've never been here, so we can't know exactly what the details of the coming series of crises will be. But extreme political and civil unrest is definitely one of the big possibilities out there, but nothing is completely guaranteed.
Yeah, exactly. And I'm sorry to press you when it is so uncertain, but I will say for myself personally, just sort of wargaming it out, I don't really see how this time they can save it to the extent where enough people get mollified and put their pitchforks down. We'll see. Who knows? Maybe $1,200 per household is enough to do it. We'll see.
Adam, one of the models that might work, at least for a while here, is the Iceland model, where their banks collapsed back in the Great Depression, and they let the banks go bust, and they just bailed out all the bank depositors and basically took care of regular people, and put a lot of the elites who caused the crisis in jail. So if we did something like that might be seen as a responsive government acting in the interests of regular people, and it might keep people out of the streets. But what's the likelihood of that? It's pretty small.
Exactly. I totally agree with you. Yeah, but I also agree with you. I think the likelihood is totally small, too small. And call me a pessimist, but I do think that the American political system is already too captured by those same elites that would be hurt the most by that I just don't see that happening willingly. But as you said, nobody really knows, and one can always hope. Charles, to you here, I know you spent a lot of time thinking about sort of the social implications that the trajectory we're on could lead us to. As you look forward here, what do you see in terms of the dangers or the likelihood of the public's response to the abuse that's going on?
Well, I'm going to take John's insight where he said if your financial system is broken, then it's going to break your political and social systems. And I think that's what history shows. And so as John mentioned, the French Revolution is one example where what causes the pitchforks to come out. History's very clear. It's when ordinary people selling their labor, right, the workforce, can no longer pay their bills. It's that simple, and in the past it was when you couldn't afford to eat, right? When you were hungry, then you picked up your pitchfork. Now you
have no other options.
Yeah, it's like the cost of living is soaring, and you just can't make ends meet. That causes revolutions, okay? And so I think we're going to have a total social reset as well as a political reset, like John said. It's already baked in. There's no way it's not, because as we're talking about, if the financial system is broken, it's your political and social systems are going to break as well. And that's what history says, whether it's dynasty change in China, the French Revolution, or turmoil in other states. And so what I'm going to kind of end on is free market capitalism and socialism are the two flavors that were offered, and neither one of them is adequate for this. Now you're going to get huge debates about this, and free marketers are going to say, "Oh no, if we just go back to an idyllic Adam Smith pure capitalism, it's going to solve everything." And then on the other side, you're going to have the quasi-Marxists going, "No, the means of production have to be owned by the people." And I don't think either one is adequate. I think we need a third way of organizing life, and we're going to need it environmentally, and we're going to need it to avoid hyperinflation and incredible wealth inequality. And so people ask, well, what is that going to be? And is it going to be a mix of capitalism and socialism, or is it going to be something that's completely different? And that's unknown, but I think something completely different might be more appealing, because just trying to mix up capitalism and socialism like we've been doing for decades is not working. It's led us to where we are now.
Well, so I want to pick up on that with the question I'd like to close on with you guys, which is, where is the hope in the story, right? Where is the opportunity here, right? I mean, this may be the end of the current order that has governed, the global economy and maybe world countries, but it's not going to be the end of life on the planet, right? I mean, something will succeed it, and we have the chance potentially to do something better, to introduce something that works better for us going forward. So, Charles, when you think about the changes that are ahead, what gives you hope in this story?
Well, that there is going to be a reset, and it's going to be much more ecologically sustainable. We're going to have incentives to make much better use of the Earth's resources and of human labor. So I do see the reset as being positive. And you say, well, what is it going to look like? Well, I mean, you could start with relocalizing, decentralizing power and capital. That's a good start. Let the local economies deal with their local resources, right? And have a networked rather than a hierarchical structure. And so that would be the way to go, and to break the links between profit being the sole impetus behind the entire system to other incentives that are longer term. And I think those, you sort of throw those three things into the mix, and you've already got a more sustainable, fair, and higher opportunity economy.
All right. Let's hope we get the opportunity to actually introduce something that sounds that sane. And John, how about you? As you look forward, I know you've written a lot about the collapse of the current world fiat currency regime. I mean, heck, you named your site dollarcollapse.com, right? It's certainly something you've been thinking about. Sort of post-collapse of the fiat currencies, if that's really what's going to happen here. Once that dust settles, what gives you hope?
Well, I agree with everything Charles said. And I would just add that crucial to a system that is sustainable in the future is sound money. Because what got us into the current predicament is that in 1971, we went off the last vestiges of the gold standard and basically handed every government an unlimited monetary printing press, in other words, an unlimited credit card. And human nature being what it is, we abused that privilege monumentally and ended up with a debt-ridden system that has to collapse and has to be replaced by something else. So if we're going to do it right, we've got to go back to some kind of a monetary system that does not give governments the ability to create unlimited amounts of new currency. So whether it's a gold standard or a cryptocurrency standard or something that's a hybrid of those two or some completely new thing, that remains to be decided. But it has to be something where human beings in charge of governments don't have the ability to create unlimited amounts of money, because then we'll be right back where we started. So that's got to be the cornerstone of the next system. And I think the debate will be fascinating when the time comes.
Great. Well, as we often say at Peak Prosperity, there's really two ways to learn. There's learning by insight, where you sort of connect the dots on your current behavior and project out what implications it's going to have. And if you don't like what those implications are projected to be, you change your behavior in time zero. Or you change by pain, where it just gets more painful and more painful to keep going down the trajectory that you're on. And I think, sadly, we're fully committed to learning the latter in terms of making the types of really big systemic changes that you guys are talking about. But I hope we get to our point sooner rather than later, where we're able to pick our heads up and say, man, this just isn't working for us. There's got to be a better, smarter way to do this. And maybe it goes to the old Winston Churchill quote, which I'll paraphrase here, but about he loved Americans because you could always count on them to do the right thing after they had exhausted every other potential option. But that is, like with you gentlemen, that is where my hope lies here, which is once we've really admitted to ourselves that the path we're on is just too damaging to our own self-interest, and something better needs to replace it. Like you said, John, I think the debate's going to be fascinating in terms of, you know, what options are going to be on the table there, and gosh, you know, I hope we make some good decisions, because you know, as Charles said, I think there's great opportunity to embrace a model that you know, not only is sort of better for you know, the economy and whatnot, but it's better for the planet and our long-term prospects as a species and all that stuff. But I also think that there's ability for it to be much more filled with sort of personal meaning for us. And I think as a culture, we've lost a lot of what sort of drove previous generations to greatness. And you know, maybe this will give us the ability to kind of get back on that type of track as a culture as well. So, gentlemen, thank you so much for joining. I feel like we just scratched the surface of the iceberg here, and there's probably, you know, 20 questions I have written down we didn't have a chance to get to, but hopefully we'll have you back on in the future with me or Chris to dive into them. Thanks so much for sharing your expertise at, you know, what is a moment in history here. You know, as you said, John, we've never been through this before. And it's interesting how the coronavirus has just served as a massive accelerant to the process, where the development and the changes are happening, you know, practically on a daily basis here, in terms of, you know, the steps that are being taken policy-wise to combat the potential collapse of the global economy. So it is fascinating, you know, that old saying or curse of, you know, may you live in interesting times. We certainly do. So thank you for helping our audience understand them a bit better. And we'll let you guys get back to the analysis that I'm sure you got to get done for your own businesses today. But it's such a pleasure to have you here. So thanks so much, John. Thanks so much, Charles.
Thanks, Adam. Thanks.